been a big earnings week for Nigerian equities. Joining me now to review some of the earnings we've seen this season is Kayode Tinuoye, Head of Research at UBA Capital. Thank you so much, Kayode, for joining us. I think we can really talk about the highs and the lows. And if we start with the highs, especially with the banks, I want to get your thoughts about what we should read into some of the numbers we're seeing. I think, of course, the standout performance so far has been Stanbic IBTC. We also know that Access Bank has done pretty well in terms of growth. Looking at those two institutions, your take on the investment case for those banks?
Well, thank you very much, Wale. The earnings performances from the banks for Q3 have been really mixed, in my view. We've seen some outstanding performances from Stanbic, like you mentioned. But when you look across board, I think what's happening is that the banks, because we know that they are coming from a very high base, so if you look at their performances year on year, you might be seeing some weak performances in terms of growth in those numbers. But when you look at quarter-on-quarter performances, you will find out that the banks have gradually adjusted to the new regulatory regimes as it relates to bank tariffs and the ability to grow risk assets. And I think if the market looks at them in terms of the progress that they have made from January till date, I think the outlook will be more positive at the moment.
All right, let's move to some of the lows. Fidelity Bank, of course, they've reported today. I think there are still some challenges there, but your take about the potential to turn the corner here. Do you think that, especially now we have a new MD in place, that we can see a turnaround in the fortunes of Fidelity Bank?
Well, I think the key thing for Fidelity Bank is the cost of funds, and that translates to net interest margin. For most of the Tier 2 banks, they've actually been very resilient in terms of keeping cost of funds low and keeping net interest margins very stable. And I think that is what is going to play out very positively for Fidelity Bank as we go on. Management focus is stronger now. Growth is, performance is more robust and more aggressive. Earnings growth from the bank, and I think that is a positive. It will bode well positively for the bank going forward.
All right, let's reflect a bit on some of the rhetoric we're getting from Fitch, the rating agency, suggesting that tough times are ahead for the banks. Now, we know this year has been tough, but looking forward, your take on how things are likely to play out going into 2015, 2016?
I think, like I said before, the banks have really adjusted to the new regime. And we've seen that quarter-on-quarter progress for the banks in terms of growth in risk assets. And you would actually recall that most of the pressure that we saw in Q1 and Q2 are beginning to abate in terms of cost of funds and in terms of loan growth. Banks are actually looking towards next year in terms of plans to ramp up their loan book. And I think that would be a very good indicator to begin to look at what's going to happen post-election 2015. Opportunities will open up for the economy, and we think that the stability that we will see after the elections will provide banks more headroom to grow. So I do not think that there is any cause for concern for the banks. I think opportunities are bound for them to grow as we approach next year.
All right, quick thought on Skybank. We know it seems set to jump into the Tier 1 class when that deal with Main Street Bank is completed and we see both institutions combined. Your take on the outlook for Sky in that context, a much larger institution, even though right now we're seeing some pressure on earnings?
Well, I think the market is waiting for Skybank to prove that it can actually make good use of the opportunity that its acquisition of Mainstream Bank presents to the bank. And I think that beyond the fact that it makes it bigger, very close to the Tier 1 space now, and in fact very close to Diamond Bank, I think the synergy that the acquisition brings on board for the banks in terms of retail footprint expansion and the likes, it's compelling enough, but the market is patiently waiting for Skybank to justify that acquisition. That's what is really the consideration at the moment.